Donnell says yes. Tony says no. Okay, everything's good. Perfect. Hopefully you guys can hear these clips that I wanted to play in the stream as well. So let me know if you can't hear those when I do get to the point where I bring them up. But anyways, today's topic, shout out to Neil right here. I did see your comment. I wanted to respond in video format. Yesterday, Neil says, Obi, what are your thoughts on Chinese/US tensions, the regulations by the Chinese on the education sector and potentially other sectors, maybe EV? Also, the secondary listing of NIO, it's all depressing the share price and is massively unsettling, in my opinion. What are your thoughts? Thanks and keep up the great work. Been with you for over a year. So Neil, today we're going to address those concerns in this video. Hopefully this clarifies things up for you guys as far as where my head is at. Because this is a live, I do have to formally say that this is just what I'm doing. What I'm saying is just for educational and entertainment purposes. It's super important to do your own research and come to your own conclusions. This is not financial advice. So anyways, if you guys are watching the market at all, it's no surprise to a lot of us, with a lot of us being in Chinese stocks, a lot of you guys in UXIN, a lot of you guys in NIO, and potentially some other names. A lot of you guys are concerned about whether they are safe places to be, and there's honestly two schools of thought on this that are kind of floating around the market. There's a lot of fear. I'll get into my opinion, but I want to share two contradicting opinions from two different analysts, and I'll tell you guys which one I agree with, and I'll expound a little bit more on that. So first, to start off, you guys, if you watch the channel at all, you guys already know what I think about what this guy has to say, but I will play this in the stream. Let me know if you guys can hear the audio at all, but this is what, Cramer had to say not too long ago about the Chinese crackdown.
Now, Jim, as we head into the weekend,
I'm going to pause here just to confirm that you guys can hear. Let me know in the chat below. Can you guys hear Cramer in the video?
You want to own Twitter? As we head into the weekend, you want to own Twitter? I knew you wanted to own Twitter yesterday.
Oh, yes. Absolutely. Absolutely. Snap and Twitter are terrific. And what's happening, obviously, is like you listen to Steve Squeary from American Express. This is how you reach the younger people. One of the things that Ned, sometimes I have to help Ned, he should have mentioned again that the streamers spent over 40% year over year, I'm sorry, quarter over quarter to get their stuff watched. And that's an incredible spend. I think Ned has got a lot of things exciting about transactions. I've been after him to be able to
5 days ago, for those of you who are just hopping on.
He's starting to get there. It is a joy to listen to him, and everyone in the media knows that Ned tells it as it is.
What we came here for.
I have heard Ned say, hey, we didn't do a good job. This time he said, and he gets money in the bank, he can say they did a good job, and I think, like me, I feel like I'm kindred to them. But you usually say, my friend Jim, you didn't do that, and my feelings are a little hurt. But I do think that the best quarter last
and some of the China stocks are just getting whacked. And what that really means is China going after companies that have too much power? Are these, by the way, people have questions about some of the accounting of these companies in China? Is that what's happening? They're trying to...
They are killing us. I mean, they know that we own these stocks, and they're showing no mercy. It does seem like when you turn a profit company into a non-profit company, what you're trying to do is make it so that there are rich people who are just stripped of their wealth. It's very Maoist. It's Stalinist. We tend not to see that. I think these are very serious violations that make us realize that capitalism is not alive in China. And we kidded ourselves that we thought that the party was somehow going to want to join the rest of the world in being.
I just want to pause and ask for you, those of you who know Cramer's history, has he ever been bullish on Chinese stocks? I personally don't think so. I think he's a little biased in his opinion. I definitely don't think that it's safe to say the entire batch of stocks in China is safe, but I feel like it's a very general statement. And I guess that's what you have to do to protect the vast majority of people who are just going to go pick willy-nilly with all the things going on. And obviously the education sector is pretty toxic right now, but we'll finish this out and I'll get to the next guy and I'll give my opinion.
Capitalistic. This is a dictatorship, and we're beginning to wonder. I question every one of those companies that's on that list. Any one of them could be vulnerable. It's time. You got to go. You can't own these stocks. I mean, the party may decide tomorrow that that Alibaba is charging the people too much. So I don't know. Andrew, I think we're discovering that they were communists, but they were communists all along.
Jim Cramer, always with a hot take.
That is a hot take.
That's it. How about upstairs? I know the wind's.
All right, so first of all, just to quickly respond to what Cramer is saying, I definitely think that there's certain things that you shouldn't touch as far as China right now due to all the uncertainty. And then also all the uncertainty floating around kind of creates better buying opportunities. Creating more risk is going to create more reward for a lot of people. We've definitely been in this situation plenty of times before, maybe not to the exact magnitude, maybe not to the exact extent, but we've been in a situation with NIO with all the fear mongering multiple times around Chinese stocks. And you know what they say, a broken clock is right twice a day or something. So maybe eventually we do get to that point where, things just go sour, and that's why there's no reward if you're not investing with a little bit of risk. If you want something safe, you know where to go, but the returns aren't as attractive. And I do have a lot more to say about it as far as the companies that I've picked, and specifically NIO and UXIN, and my thoughts on that. But I want to show you this other opinion from another analyst who I more so agree with rather than Cramer. And I think he gave a more fair, less biased opinion on the situation as well.
If the Chinese down is causing so much pain for its own companies, why are they doing it? Why are we seeing such an aggressive tone? Joining me now is Derek Scissors. He's senior fellow at the American Enterprise Institute. Derek, it's great to have you.
And he seems more of an expert on this type of stuff, by the way.
Side and on the education side here. So explain that.
Well, I would actually distinguish tech from almost everything else. Education is an example of something we see from the Chinese all the time. This sector is expanding too quickly. They're chasing money too quickly, too much, according to the government, of course. We have some complaints from consumers. Everybody calm down. We're going to go through a little rectification campaign, and then you'll be allowed to go back to normal in 6 months or a year. That's very normal for China. It mostly happens in property. There's certainly risk to the stocks, but the sector should be calmer if you look forward a year. Tech is different because it's really about a sea change. The Chinese have said, we need to control the data. All of you need to fall in line. We love tech. We can do without the tutoring sector. It lives, it dies. We don't care.
And as we get later into this live stream, I'm going to talk exactly on that point that he just mentioned, because I think that's a really great point. So keep that in the back of your mind.
There's going to be a booming tech sector in China, but under our rules. So they're happening at the same time. People are putting them together. That's totally understandable. But the projection for education is more like a return to normal in a year. And tech is going to thrive, but you better fall in line.
What do you make of the timing of all this? This morning as well, I think Didi got a downgrade on concerns about Chinese regulation, and they're running afoul of the government. We've talked at length about how they IPO'd on the day of the Chinese Communist Party anniversary, and in retrospect that looks like a very bad idea, and they had been warned. But it seems like since that date, and maybe we should expand the time horizon back to when Jack Ma gave that speech last fall and sort of initially raised the ire of the Chinese Communist Party. What sequence of events here is playing out? What's the catalyst? Where is it going? Or are we just lumping these all together because they're happening all at once? and there's not actually any connection.
I do think there's a connection within tech, and I think you hit two of the events. The Chinese tried to warn everyone by delaying the Ant IPO because, in part because Xi Jinping was mad at Jack Ma. They discover, what they see as problems and who's controlling the data rather. If you're going to list overseas and make a lot of money, maybe you'll start following their rules instead of our rules. And somehow Didi doesn't get the message or is so eager for its IPO it doesn't listen. And so they had to send another message. And there is a risk, for sure, of yet another message. There may be another company targeted if they're not understanding that you will follow our data rules. I don't care how much money you're making overseas or you're getting from foreign investors. So I think the Jack Ma event, the Didi event, those are.
A big part of this is that, like he said, China just and I'm not defending it at all in any way, but I'm stating the fact of the situation and what China wants for companies to be able to have success over there and be able to really grow and thrive. They want people to play by their rules. When it comes to data, that's very important. So if people are not falling into their regulations, which the Western view of that is that it's very strict at times, then that's when they begin to crack down. And on top of that, when they start making money in sectors like education, and that's also going to be something that's really important for these companies to watch out for, because China really prides themselves in education and they don't want it to really seem like it's a for-profit type of model. So it's something that they're really cracking down on. I'm personally not in the education sector at all. I think that the EV story in China is great. I think that the used car market story in China is great. And I'll finish letting this guy say what he has to say, and then I'll get to exactly why.
Connected, and people who are interested in the Chinese tech sector, they have good reasons, but they shouldn't be surprised if there's a third crackdown like these two.
Probably the biggest Chinese tech name at this point for U.S. investors is Alibaba. What are your thoughts about that? The risks that they're exposed to now, the growth prospects, like you said, if in the long run it's definitely in the Chinese interest to have these tech behemoths, they would, again, seem to be one of the most notable cases.
Yeah, there's too much money in Alibaba. I don't see that much downside risk. There's too much money, foreign money in Alibaba, for the Chinese want to cut that conduit off. That money benefits the entire Chinese economy. It allows Alibaba to expand overseas, which is a strategic goal of the Chinese government. But at the same time, they want to keep Alibaba from becoming a threat to their financial system, from drawing savings away from state banks and so on. So, the downside risk for Alibaba, I think, is somewhat limited, but so is the upside gain, because regulators don't want Alibaba to be that large and that profitable. At some point, you could see pressure for a split, divide the company up, where both companies look pretty good, but they don't have the same size and reach. I think that's where Alibaba is. It's too big to fail, but in China, you can also be too big to succeed.
Does that mean some of these Chinese tech names in particular are becoming utilities? In other words, trading almost like bonds. I know that seems insane to say after the past 12 months, but going forward, if the downside and upside is capped, if they're effectively extensions of the state, then they have both monopoly protection, but also not that much downside.
Right. That's going to be part of the sector. I think that's well put for what part of the sector looks like. If you have data the state considers especially valuable, your operations are going to be restricted. And therefore, your upside is going to be limited. And that's really the investor evaluation that has to go on in Chinese tech sector. Are you backed by the state and strategic, and there's a huge Chinese market? Great. Do you have data the government's going to control, which is going to mean they're looking over your shoulder, mean foreign regulators are unhappy with your operation in their market because they think you're going to turn the data back to China? That's going to cap your upside. So,
All right. I think that's all we needed to hear from him. But obviously, I more so agree with his opinion on China. Talking about a company like Alibaba, I like what they said. In China, you can be too big to fail, but you can also be too big to succeed. And what does that mean on the negative end of that is that it could break up the company, but still they will still have thriving units. I thought you were on a Zoom call with CNBC. Oh no, I wasn't. But yeah, what that means is either way, Alibaba's not going anywhere. You hear guys on CNBC saying, spreading all this fear, saying that people's investments are going to end up being donuts, going to zero, which is quite possible, but you really have to decide what type of companies are you investing in. So when I talk about a company like NIO, it has what, around a $68 billion market cap, not too big to fail. When I talk about a company like Alibaba, they're at like a $531 billion market cap. Obviously they're too big to fail, but what he's mentioning is that they could be too big to succeed as well. The government doesn't want them really sidelining their economy and taking too much control, which at the end of the day just means that they'll end up regulating them some more and breaking up the company if they don't follow code. But a company like NIO is a nice situation for someone like me, the way that I look at it when I'm evaluating the situation, because NIO has a lot of government backing behind them already. Electric vehicles are the place where China wants to go. They want to have a cleaner future. So I think that the EV story in China is still fine. NIO's getting a lot of money from the government. So when you see that the education sector is being cracked down on, a lot of people just lump this into this whole China argument. Like, it's not time to put money in China. Like, we shouldn't invest in China. It's too dangerous. But you have to dig a little deeper, because I feel like we've been in this place with NIO, quite a few times where people were talking about, the geopolitical tensions, and maybe in a different way, maybe about how Chinese stocks get delisted from the US, but still it always ends up being like this big bubble of just like doubt and fear mongering that's just spread throughout the investment community. On top of that, you guys say, what about UXIN? Well, at the end of the day, the government wants the used car market to be a 2x of what it is today. On top of that, they're incentivizing people to buy used cars. They're going to make them pay less in tax. They want to make sure that all that money is coming back into their economy instead of just, throwing those used cars out. So I feel like there's a good case to make for electric vehicles, which I do consider, partially tech stock, but they still have that edge to them because it's one of the biggest things in China, the biggest EV market in the world. And then the used car market, which is an emerging market that's doing extremely well. The government's pumping lots of money into it. So when it comes down to it, I think that the two Chinese investments that I do have are, good investments, and the education story doesn't really change my ideology or theories that I have on these investments. And I think that at this moment in time, for me personally, you decide what's right for you. These are buying opportunities for these companies if I'm looking to add more shares to them. So um, a lot of the things going on with China, there's a lot going on. Neil also asked about NIO's secondary listing, and that could be what's like pulling the stock price down. Well, I think that it's smart as a company to diversify, especially with Chinese stocks being the way that they are right now. That could really help out the company when it comes to funding, since since they're diversifying where they're getting their investments from, how much money is coming back into the company. So I personally think it's smart for the company. There's going to be times when American exchanges are up and Chinese exchanges are down, and vice versa. But NIO is really playing it on both sides, which I think is personally smart. So that was pretty much my thoughts on everything. I want to hear what you guys think about China and all the crackdowns and all the fear mongering going around. I definitely think there's stuff to stay away from. Don't get me wrong. I'm not saying go willy-nilly go invest in any Chinese company. Like they said, you're playing with like a company like Alibaba, limited downside, limited upside. So you really have to evaluate that, the size of the company, what's the government involvement, and things like that, and then it makes more sense from an investing standpoint. Let me see what you guys said. What's up, Obi? Sold majority of my NIO shares when it hit 50. We've been at this for a while. Still have 1,000 shares long, and we'll swing trade them. Made a killing, my friend. Nice. I mean, it's never a bad thing to get in and out at the right time, but that can be a dangerous game to play as well. And I know from firsthand experience. Hey, Obi, I thought you were on it. Oh, I read that one already. Let's see. Obi will be interviewed one day. Thank you, John. Isn't Tesla NIO's biggest competition in China? I don't see this company failing, especially with Tesla over there. I don't see it failing either. I think there's just a lot of this stuff is overblown here. Scared money doesn't make money. Agree with you. No reward, then what's the risk you're taking? Andre Swanson said, "You ain't never lied." Thank you, Andre. I think this was a pretty productive conversation. Disagree with Cramer, more so agree with the other guy. He seemed to provide more facts and more backing to what he had to say. Steven, I'm going to ignore that comment. Just dumb. Is my favorite song. All right, guys, that's going to be it for this video. I'll hang on a little for like a minute, answer any questions you guys may have. If you're on the stream right now, make sure you hit the like button. That really does go a long way in helping out the channel. Make sure you hit the subscribe button so you don't miss out on any videos, so you don't miss out on any streams. But those were my thoughts as far as the fear mongering going around as it pertains to China. I'm not going to touch any of my NIO stock until it gets to 200. That's a smart idea to have if I were you, but not financial advice. Um, just got here. Oh man, you missed it. You missed it. I mean, catch the replay. It'll be up. I started streaming pretty late today because I had a lot of stuff going on outside of YouTube.